Guys, just picture this. 3 years ago, you bought Ethereum at $4,000 a pop. Life got busy, so you deleted the app and moved on. You worked hard and stayed faithful to crypto's future. Then last week, boom, Bitcoin is over 90K. And Ethereum, people are saying it is going wild. So you rush to open your trading app, family watching over your shoulder, and you see $3,000 Ethereum. What? How did the second biggest crypto in the world get left behind? Where is the pump we've been waiting for? So today, let's dive in and explore Ethereum's struggles through the lens of a kingdom's rise and fall. Okay, why a kingdom, not a company? Well, Ethereum isn't a traditional business. It doesn't live or die by cash flow or investors like a startup. It's more like a decentralized government, funded by gas fees and token economics. At its peak, Ethereum was the backbone of the crypto market, a kingdom in its golden age. But just like every dynasty, Ethereum faces the same three threats: internal corruption, civil unrest, and outside invaders. According to the history, about 40% of the dynasty fell to internal power struggles. And Ethereum's leadership mirrors this pattern. You saw Vitalik is a king, but the truth is that he is actually the figurehead king. He doesn't rule directly, but his influence is everywhere. However, not everyone in the court agrees with the king. Just look at the developer Peter, who publicly criticized Ethereum's unclear roadmap, or the controversy around foundation members who moonlight as consultants for private projects. And Charles Hoskinson, he went off to start Cardano, claiming to have the real Ethereum killer. And Gavin Wood, he launched Polkadot, calling it Ethereum 2.0 without the baggage. Both projects aim to outshine their origin, but Ethereum stayed on the top thanks to its strong ecosystem. In one infamous case, two Ethereum researchers were advisors to agent layer and were said to receive massive payouts in tokens, possibly more than their current wealth. And the crypto community? Furious. And what's worse, the foundation keeps dumping Ethereum at market highs, profiting while the holders are left holding the bag. Meanwhile, layer 2 projects like Arbitrum and Base, the supposed defenders of Ethereum, are carving out power for themselves. Arbitrum even accepts USDC as gas fees, signaling ambitions beyond Ethereum. And in 2017, BNB was first listed on Ethereum. Binance still chose to be rebel and built its own Binance chain. This layer 2 has raised a lot of funds from VCs on one hand. And on the other hand, they have attracted a large number of users' Ethereum tokens with airdrops as a bait. And a lot of funds and development have been invested in many ineffective and repeated infrastructure. That's why Vitalik announced he would no longer support any new layer 2 projects. Now, the assets and users on the chain basically ran away after the airdrop of various layer 2s listed this year. Once upon a time, all major crypto innovations, ICO, DeFi summer, NFTs were all born on Ethereum. Now, the crown is slipping. Solana directly gave birth to the new track of AI memes and also received the explicit support from A16Z. And now Solana is thriving with its high-speed, low-cost model, even attracting AI and meme projects once destined for Ethereum. And Ton, backed by Telegram, is quietly building a massive user base and eating into GameFi's market share. And Base just completed the first AI to AI payments in history and recently launched a new set of fully on-chain AI agents, which can create an AI agent with its own encrypted wallet in 3 minutes. The result? Ethereum isn't the default choice anymore. It's just one option in the sea of alternatives. Think the recent weakness of Ethereum's price, in addition to the internal and external troubles mentioned above, is that the Ethereum supporters may change their mind. It has been nearly 10 years since the release of Ethereum's mainnet work, and the total market value has reached $300 billion US. You probably know that the largest asset in the world is gold, $18 trillion US. And the market value of Ethereum ranks 27th in the world, which is not low. There is a saying in the financial industry that after an asset reaches a market value of $300 billion US, it is difficult to increase its valuation. If it goes up, it must rely on performance, and it is difficult for the original supporters to continue to maintain it. Now, Bitcoin is growing fast, but Ethereum lacks stamina. Why this? Okay, the Ethereum ecosystem thrives because of these 3 groups. The first type is miners. When Ethereum was still in the POW mode, there were many miners who supported Ethereum. Later, it changed from POW to POS, and the miners were completely offended. The second type is various on-chain users. These users contribute most of the gas fees of Ethereum ecosystem. However, in the absence of lending application scenarios on the chain, there are almost only 2 things left to do, which are meme coin trading and farming airdrops. And during the recent meme coin battle, many users have shifted to Solana. Meanwhile, the airdrop farmers have been completely disillusioned. From zkSync to Scroll, one Ethereum-focused project after another has adopted "we don't care" attitude, essentially forcing users to migrate to Ton to farm airdrops in gaming projects. The third group is Ethereum investors. Among them, some are die-hard supporters who have stuck with Ethereum for the long term. But what's interesting is how the Ethereum Foundation always seems to perfectly time their token sales when the prices are high. Take 2021 for example. Just 2 days before the infamous May 7th crash, they sold 35k Ethereum at a price of 3.5k. Then, at Ethereum's all-time high of 4.6k, they offloaded another 20,000 Ethereum. This perfectly timed access earned the Ethereum Foundation a reputation for signaling market tops. And over the past year, the foundation has been even more active, making sales almost every month. This kind of maneuvering has left many investors disheartened. Okay, compare this to Bitcoin. Its miners not only continue to support the network, but some of the biggest mining operations have even gone public on Nasdaq, raising funds to boost their computing power. With the growth of Bitcoin ecosystem this year, even meme coin players and airdrop hunters have joined in, contributing around 10% of the miner revenue. And for Bitcoin investors, there's no foundation dumping coins. Instead, Bitcoin's narrative as a store of value continues to gain recognition in mainstream markets. Who knows, maybe one day US might even classify Bitcoin as a Federal Reserve asset. It's clear that Bitcoin's supporter base is only growing stronger, while Ethereum seems to be shrinking. Okay, let's summarize the issues. First, the internal problems. Ethereum Foundation is in a strange position right now. It is practically surrounded by capital interests, while its members are making huge profits. And the foundation itself still needs to sell Ethereum from time to time just to keep the lights on. Then there is a layer 2 development strategy. Looking at the current situation, the only competitive layer 2 solutions in Ethereum ecosystem are Arbitrum and Base. Most of the other layer 2s are dragging it down. If this trend continues, and either Arbitrum or Base rebels, the Ethereum ecosystem might end up existing in name only. On top of these internal challenges, Ethereum also faces significant external pressures. Historically, every crypto bull market has been driven by explosive growth in the Ethereum ecosystem. And around 90% of the VC investments were historically poured into Ethereum-based projects. But this year, that narrative might shift to Solana and Ton. And a large chunk of VC funding is already flowing into this ecosystem instead of Ethereum. Since 2022, Ethereum has alienated its miners, and this year, it upsized the airdrop farmers. With Ethereum prices dumping and the foundation continue to sell tokens, they seem to be on the verge of alienating investors too. So it's fair to say that Ethereum's current situation is becoming increasingly difficult to manage. And according to the history, once the dynasty starts to decline, it's really hard to reverse the trend. Okay, is there a way out of this mess? Here is a wild suggestion. What if the Ethereum Foundation members donate part of the money they earn from external advisory roles back to the foundation? After all, their positions are directly tied to their association with Ethereum. And with the extra revenue, the foundation wouldn't need to sell Ethereum anymore and could even buy back tokens instead. But as you probably know, in the crypto market, most conflicts can be solved by pumping prices. And if that happens someday, who knows, Ethereum might bounce back overnight. Alright, that's it for today's video. I will see you guys in my next one.